bringing you the latest in tax credit news, insight, and analysis. This is Tax Credit Tuesday with your host, Michael Novogradac.
Hello, I'm Michael Novogradac, and this is Tax Credit Tuesday. This is a November 7th, 2023 podcast. 2 weeks ago, the Community Development Financial Institutions Fund, often referred to as the CDFI Fund, opened the application period for the current year 2023 round of New Market Tax Credit Allocation Awards. As listeners likely know, the CDFI Fund will award $5 billion in New Markets Tax Credit Allocation Authority in this round. It is $5 billion in issuance authority, and you get tax credits equal to 39% of the $5 billion. It's not $5 billion in new market tax credits, but oftentimes when you refer to it colloquially, it sounds like that's the case. Now, the application deadline is December 19th, and that's a Tuesday, I believe. So the clock is obviously ticking. Now, there are other deadlines as well, and we're going to discuss them in today's podcast. Today's podcast is focused on what you need to know about the upcoming application round. Now, we at Novogradac will be presenting a webinar for those of you interested in knowing more about the application and, more importantly, recommendations to increase the competitiveness of your application. That webinar is next week on November 15th, which I believe is a Wednesday. We'll talk more about the webinar during today's podcast. I'll also share a link to register for the podcast. I'll show that link in today's show notes. Now, if you're a frequent listener to the podcast, you may remember that last month, just a few weeks ago, we had an episode about the calendar year 2022 allocation awards. On that podcast, we talked about the likelihood that the next round would open soon. So in short, it did open soon, 31 days later. So why are we talking about the new market tax credit application? Well, the main reason why you're probably listening is that applying for allocation issuance authority is a very competitive process. Community development entities, and they're the recipients of the new market tax credit allocation issuance authority, compete to be an awardee. And to give you some context as to the level of that competition, in the most recent round, there were 197 community development entities or CDEs that applied. Of those 197, 102 received allocation issuance authority. By reference, the prior round, there were 199 CDEs that applied and 107 received allocation issuance authority. So as you can tell, or as you can see or hear, slightly more than half of the CDEs that applied in recent years received allocation authority. Many are repeat winners. However, every round does have some first-time awardees and some that don't win that have traditionally been successful. In short, the competitive nature of the application means that if you're a CDE that's applying or considering applying, this podcast is for you. This podcast is also important if you're a business that's interested in receiving New Markets Tax Credit subsidized financing. In the course of the podcast, we will talk about how businesses can ensure that they're on the radar of CDEs that are applying for allocation issuance authority. I will note that at Novogradac, New Market Tax Credit clients are a significant part of our business. Surprise! We have many clients that work with New Market Tax Credit financing, obviously CDEs and businesses that receive the subsidized financing, as well as investors. Additionally, I want to note we have a New Markets Tax Credit working group that is an industry leader in trying to help work towards an ever more effective program. In the working group, you can network with other stakeholders. If you're a member, you can hear how others are addressing specific issues and have a more powerful voice, a more collective voice in communicating with the CDFI Fund, the Internal Revenue Service, and other government agencies. And finally, I did want to note we did have a New Market Tax Credit conference a couple of weeks ago in New Orleans, and we do have another one coming up in January in the greater San Diego area. These conferences are a great opportunity to learn more about New Market Tax Credit financing, as well as to network with others who work with New Market Tax Credits. I will share a link to register for the January conference in today's show notes. Now, my guest today, and those of you that are watching on YouTube can see, is an expert in New Market Tax Credit in general and the allocation application specifically. She's also one of the two speakers on next week's webinar. She is, of course, Rebecca Darling. Rebecca works at a Novogradac's Metro Atlanta office, And Rebecca was one of the guests a few weeks ago with our colleague, Brad Elphick, discussing the calendar year 2022 New Markets Tax Credit Awards. As I noted earlier, Brad and Rebecca did predict the calendar year 2023 application round would open soon, and they were right. Now, in today's podcast, Rebecca and I will discuss what you need to know about the calendar year 2023 application. That's whether you're a CDE or a business or another stakeholder working with new markets tax credits. We'll start by taking a high-level look at how the application is organized, and then we'll discuss various deadlines that applicants need to keep in mind. After that, Rebecca will also share the level of changes in the 2023 application, and more importantly, how applicants should be responding to the notable changes. We'll also talk about some key issues that CDs should consider when completing their application. And of course, what businesses that are seeking new market tax subsidized financing should be doing right now. Now, with the application deadline in December, the clock is certainly ticking on the application period, and we do have a lot to discuss. So if you're ready, let's get started. Rebecca, welcome back to Tax Credit Tuesday.
Thank you. Thanks for having me back again so quickly.
Yeah, it does seem like you were almost, that you were just here as a guest. And of course, that's
Yeah.
because you were just here as a guest.
Yeah.
But for listeners who may not remember all the details, if in terms of your background with new market tax credits, please share a little bit about what you do at Novogradac and obviously focusing on your new market tax credit expertise.
Sure. So I've been with Novogradac for 19 years next month. So getting close to that anniversary. And I focus primarily on the affordable housing and community development areas, particularly in the new markets tax credit area. So I've actually worked in new markets for 16, 17 years, which is just so hard to believe. But my clients include CDEs. So I prepare audits and tax returns, various compliance services, help with AMIS reporting. We'll talk about AMIS today. And then certainly the allocation application is something that I work pretty heavily on. I also assist those businesses seeking new market subsidized financing. So we call them Qualic Bs. And really, a lot of what I do for those Qualic Bs is provide a lot of education and guidance to help them be successful, to help them find CDEs, to help bring their businesses to fruition. One of the things that a lot of people know about Novogradac is we perform financial forecasts. So pretty much every deal that gets closed with new markets tax credit financing needs a financial forecast. And so that's something we provide for a lot of our clients for many years now. And then really the last thing that I do, come from a big family of teachers, so somehow I had to work teaching into what I do. So I do a lot of training. Mike talked about it. I'm on a podcast. I was on a webinar last month talking to businesses who are seeking new markets financing. I'll be on a podcast next week talking about the application. And I like to lead the basics workshop that we have before each of our new markets conferences. So I really love new markets and getting to teach people about it and really just getting to see everything that comes from this wonderful industry.
Great. Thank you for that, Rebecca. As listeners can tell, you do have a high level of expertise in the new market tax credit area. And I'm looking forward to next week's webinar. So to start things out, maybe a bit of a level set, you could share an overview of the new markets tax credit application and maybe talk about how the application is structured, how it's reviewed, and of course, how it's scored.
Sure. So the allocation application is very robust. It is a substantial application, which requires hundreds of hours to complete. I think if you'd look up in a thesaurus, substantial and robust, like every synonym you could get, like that's how it feels. It's an extensive application. So even if you just look at the application that the fund published, you can see it's 146 pages before you even add any information to it. So the application is comprised of 45 questions, which most of those questions are really multi-step questions. And then also 5 exhibits, which contain multiple tables within each. So really, let's talk about the application itself. There's 6 primary components. All right. So there's applicant information, business strategy, community outcomes, management capacity, capitalization strategy, and prior awards. Now, what I really think you're going to probably focus most of your time on, because I tell my clients all the time, what you really need to focus the vast majority of your time on is business strategy and community outcomes. Why do I say that? Well, let's talk a little bit about how the application is reviewed and scored, and you'll understand why I give that piece of advice to all my clients. So, the application reviewing and scoring process is really a two-phase process. So in phase one, there are two independent non-CDFI fund staff reviewers that evaluate and score the business strategy, community outcome stage. And so you need to receive a minimum amount of points in those two sections to even move on to phase two. And so that's one of the reasons why I talk a lot about those two primary sections. Now, once you finish in the phase one review process, if you have received the needed amount of, so just to give you an idea, that means at least 40 points in each of those two sections, and then an aggregate score of at least 85 points. Now, that includes two opportunities for some priority points. So I want to highlight those so you can be thinking about it. So the first is you can earn up to 5 additional points for demonstrating a track record of serving disadvantaged businesses and communities. And then the other opportunity is 5 points for committing to invest substantially all of the proceeds from your qualified equity investments, or QEIs, into unrelated entities. So you know what that means? You can't do your own deals. That's not how new markets is structured, but we can talk about how to work through that if you've got an opportunity and you're also a CDE. All right. So if you've moved past phase one and you go to phase two, that's where the CDFI fund staff come in. And they not only look at the sections that phase one looked at, but now they're looking at your other sections, your management capacity, capitalization strategy, and prior awards. Now, for prior awards, this means if you have received prior new markets tax credit allocation or are participating in other CDFI fund programs, they're going to want to hear about it. So not applicable to everybody. So certainly new CDEs, that's their favorite section because they can get through it quickly. All right. So from that point, the scores are ranked. The CDFI fund decides their recommendation for who will receive an award and for how much. And then it goes to a selecting official. I like that term, a selecting official, and they make the final determinations. Um, Really, the last two things that I think are important for our CDEs to think about is in the Notice of Allocation Authority, or the NOAA, there are two requirements that the fund staff have to make sure they meet. All right. So the first thing is the proportion of allocations to rural CDEs needs to be at least equal to the proportion of highly qualified applicants that were rural CDEs. Well, rural CDEs are CDEs that 50% of their track record has been deployed to rural areas, non-metro areas. And that is their expectation with a new market tax credit award. They would continue those efforts. And then lastly, the CDFI fund staff must ensure at least 20% of QLICs made under the current round will be invested to non-metropolitan counties. Now, this is something that CDEs can commit whether they are a rural CDE or not, but it is something that is in that NOAA, so it's important to understand. And I think really the last thing, and I think, Mike, you commented on, this is a very competitive process. And we can see that from if you don't receive an allocation, you receive what's called a debriefing letter, and it shows you the allocations of scores, and you get a general idea of where you fell in there. And we can look at that, and you can really only afford to lose a couple points and still potentially receive an allocation. So it is highly qualified, which is why it's so important to understand the process and all the intricacies.
So, Rebecca, thank you for that. And we'll get back to some recommendations you have on the actual completing of the application. But before we do that, I wanted to talk about deadlines. Now, I mentioned Tuesday, December 19th as the application deadline, but there are as many other deadlines that if you don't pass, if you don't meet those deadlines, then your application won't be considered any further. So please share those other deadlines as to what CDE should know about if they're considering applying.
Sure. So there's a couple key deadlines to be thinking about. The first one is tomorrow, November 8th. So if you are an entity that hasn't officially applied to be a CDE and want to apply in this current round, you need to submit that CDE certification by tomorrow. For everyone else listening, if this is something that you're thinking about doing, you can submit that application at any time during the year. But if you want to apply this round, deadline's tomorrow. Also, if you are a prior awardee and there's going to be a deadline, the Quilici and QEI deadline on March 21st of next year. If you want to make sure that you're still eligible to receive an allocation, the fund wants to see you're deploying your allocation, you need to make sure any subsidiary CDEs that you need to create to meet that deadline, you have submitted to them by November 8th. Now, another thing to think about is you need to register. You need to tell the CDFI fund you are planning on applying. That is due Wednesday, November 15th. This is a make or break moment for you. So if you do not register, there is no going back and telling the fund, I made a mistake. I forgot to do it. So, with that being said, I'm the obnoxious one to all my clients saying, you have to send me a screenshot that shows me that you did this because I'm going to keep asking you every time I talk to you until I see it. So, when you do it, you can even send me an email, even if you're not a client, say, I registered, I took care of it, I listened to what you said. And then that application deadline, Tuesday, December 19th. So, TikTok, it's time to be going. And then lastly, that QEI and Quilici deadline. All right. This is something that we've talked about many times. It's March 21st of 2024. So, depending on when you've received prior allocation, the fund wants to see that it's being deployed. And so, depending on the round, they expect a certain percentage deployed. So, it's absolutely critical that you meet that deadline. Otherwise, you're not eligible for another round of allocation yet.
So thank you for that, Rebecca. And you mentioned earlier what Quilic should be doing. And those are the businesses, those are qualified, active, long-term community businesses that leads to the acronym Quilic. But you mentioned QEI. So you had the initials of QEI and the acronym Quilic. Maybe share those definitions for our listeners.
Sure. So a QEI is the qualified equity investment, and the Quilici is the qualified low income community investment. So the QEI is what the tax credit amount is based on. The CDE receives the authority to make QEIs that will generate the tax credits for the investors. And then that Quilici, that investment, is what the business receives. Most often, that's in the form of a loan, but it can also be an equity investment, or there's some other options as well. But that's what's most common.
Great. Thank you for that. So historically, the CDFI fund has updated the application with each round. This round is no different. The application has been updated. Sometimes there are really many notable changes in an application update. Other times there aren't so many. This year was a year of few notable changes. That said, there were some. So if you could share with our listeners what notable changes were in this year's application.
Sure. So there were minimal edits, which is what we expected. Now, why is this what we expect? Well, if the CDFI fund is making a significant change, they have to release the application for public comment. So, what they typically do is since it's required to be released for public comment every 3 years, they make any of major changes at that time. So, we weren't expecting any large changes since we just had that comment period last year. So, what's changed? Well, there's a couple things. The first thing you're going to notice when you open the application is to change the format. So, they have changed the format of the application to more of a tabular format, which is more consistent with other CDFI fund administered programs. It's just the way it looks. Plenty of people have gone back to the old way it looks as they're working on their applications. But there's really only a couple handful of things I really want you to think about. So the first one is FAQ 26. The fund releases application FAQs with the application release. So it's important to read all of those. But here are some of the key ones that have changed. How can a CDE identify whether potential new market tax credit investments are located in new market tax credit eligible low income communities? Well, first off, you can map them on the CDFI Funds website. You can map them on our website. But what's really important is in this round, you must use the new census data. So, any of the businesses or projects listening, make sure that you're mapping your business location using the new 2020 census tracts, because those are the census tracts that the businesses need to enter into their application of. These are generally consistent with the types of projects I would be using for my new markets allocation. Another area is around innovative investment. So FAQ 62 is where the CDFI fund lists the 10 quote unquote underserved states. So these are the states that have historically received fewer Quilicky dollars compared to their population. And so the key change here is Tennessee was removed and Kansas was added. So the 10 states are Arizona, California, Colorado, Florida, Kansas, Nevada, North Carolina, Texas, Virginia, and West Virginia. Another key point is the CDFI fund says Puerto Rico and any of the island areas of the United States are already considered underserved. And then another area to just highlight real quick is in relation to what's called severely distressed areas. So question 25 asks the applicant to commit to deploy at least 85% of their allocation to areas of higher distress. So, Mike, guess how many applicants that won last year said, yeah, I'll make that commitment. It was all of them. And in the
100%.
last one,
Imagine that.
and the last one. But what's important to understand is those components. What are the areas that are deemed higher distress? So there's 12 different areas, and you have to meet at least one of items 1 through 5 or two of items 6 through 12. So as a business, this is something to go ahead and look at right away. Are you in a low income community? All right, now are you in an area of higher distress? And if so, which of these 12 categories are you meeting? This is key information to share with a CDE, and they're going to be asking you that information. So that's your homework in advance. Really, the key changes there are both native areas and U.S. territories were added to those primary 1 through 5 categories. And then SBA hub zones, Hope 6 redevelopment, and that federal, state, local zones, all encompassing category, those three were removed.
It's very important to know what was taken away. So thank you for that. So when I think about the next round of new market tax credit applications, I think of many applicants, they're going to fall into one of two categories. There's more than just these two, but there are two broad categories. There'll be those that apply in this next round that did receive an award last round. Then there'll also be those that will apply but were unsuccessful, but did apply in the most immediate round. When you think of these two categories, those that applied in one, those that applied and were unsuccessful, how do you think each of those categories of applicants should be approaching this round?
Well, I think the first thing is if you were unsuccessful, you got that debriefing letter that I talked about. Well, that gives you a little bit of insight into how you scored. And so it does show your score range for business strategy and community outcomes. So that oftentimes does help to determine which area maybe needs more focus. If you were successful, then you know you're working off of a successful application, but you also need to continue to update it, which is always the challenging component, right? Update it, but don't break anything that the CDFI fund like. But I think that's really something that every applicant needs to be thinking about. Very few times will I read an application from last year and say, just throw it out and start again. But you have the bones. Now you're going to build and strengthen. If you were successful, you need to still read last year's application with fresh eyes. There's going to be changes every round in your business. The economy changes, the needs of your community change. And so we've seen evolutions in applications over the years. And so it's important that you continue to keep your application current. I think that's something that CDEs can often miss. A bullet point went away in a question, and you still include that in your response. You need to really stay tuned in to the questions. But you're right, Mike. Last year, 60% of the awardees were successful in the last round, and 81% were successful either in the last round or the round before. And so that's a great jumping off point. But just because you weren't successful doesn't mean you can't become successful. It just means a little bit extra digging into some of those details. Every fraction of a point matters.
Yeah, I definitely find that the fact that those that applied and did not get an award, getting the debriefing letters, and those that applied and get an award, not getting it, there's almost like a leveling effect, and that you're telling those that didn't get an award, here's some insights, and here's how to make your application better. And if you've applied and got an award, you don't get those insights. So it now almost
Yeah.
becomes a bit of a back and forth where the entities that receive awards have to, as you point out, figure out how to make the application better, more responsive without taking away what made their application attractive and a winning application. But now let's turn into some more specifics. We've talked to things more generally. If I'm a CD that is applying, if you could maybe share some background on how much time they should expect to spend on the application. That's a loaded question. The benefits of having multiple reviews and when they should be targeting actually completing the application, just so they're not running up against the wire of December 19th.
Yeah, absolutely. Well, so typically when I see applications and I'm working with clients, it's hundreds of hours. And typically that's 250 to 500 hours. I've seen more, especially when you're first starting out and you're gathering all the information, right? Those are your physical hours. The emotional hours, those are immeasurable because all you're doing is thinking about that application. You're sitting at dinner thinking about that application. Something that I think is really important is you can't have enough reviewers. You need to talk to people within your organization that aren't hands on in your application. Have them read it, make sure everything's making sense. Have someone like myself read it, provide guidance. A lot of my clients, whether they were successful or unsuccessful, they want me to look at last year's application and give them suggestions for improvement because it's all about continuing to improve. So that's really important. One of the things that I do with a lot of my clients is I'm bossy, and apparently I found a way to apply that in my new market tax credit life. You got to be organized. You got to have a game plan. My mom always says if you don't have a plan, you're planning to fail. So I'm the one sitting and saying, all right, let's put some dates on the calendar. When are your goals to get different sections finished, ready for review, ready for reading? I always tell people you need to go ahead and basically plan to be done with your application a week to 10 days before the deadline. That's best case scenario because then you can get it in and you can make any edits, give everything a really good read. Because in my mind, that last week is where any disaster could happen. So give yourself as much built in time as possible to read that application. Because I think the more you read it, the more you can ensure that your business strategy, that story is being told throughout the entire application and it's as strong as possible. And if you see an area that really can just be tightened up, that fraction of a point really could make the difference.
Don't want you to out clients, but if you could maybe discuss the deadline of December 19th and more specifically, what portion of your clients actually submit the application on the 18th or earlier?
Sure. So I do work with a lot of clients. And if you're like, oh, I don't want her saying anything, I don't say, oh, well, Mike's application said this and Rebecca's said this. We keep it very high level, which is what I think a lot of the clients actually appreciate. Just give me an idea of what the industry is doing. So last year, most of my clients submitted well before the deadline, some the week before, and I was really uncomfortable with how pulled together everybody was. But he ended up being successful, so that
Right.
worked out really well. But yeah, I would say that many CDEs do submit on the deadline or the day before, but you do have to enter in all of your responses and data into the online system for the CDFI fund. And so it's important to not wait until the last minute. And then December 19th, it's due 5 o'clock Eastern time. So keep that in mind for all you West Coasters. You got to make sure it's 5 o'clock Eastern. And then I'll give a pro tip. So, my pro tip for everyone working on their applications is complete your phase 2 sections while you're working on your business strategy and community outcomes section. We're going to talk about business strategy and community outcomes the entire time you're working on your application. But it's very easy to forget about those other sections, right? The business, the management capacity and capitalization strategy. So, especially if you've won before or you've applied before, you're probably not going to have substantial changes. And those are things you've got to be constantly knocking things off the to do list and then really making sure that you've got your business strategy and community outcomes as strong as possible.
So thank you for that. That's very helpful. And maybe you could go into a little bit more detail on how you assist CDEs with their application.
Sure. So for many CDEs, I read their application and provide comments on ways to strengthen. For some, it's reviewing last year as well as this year. For some, they just have me review on an annual basis. For other clients, they want me a little bit more hands on. And so I really facilitate the process for them in a lot of ways. I help on strategy discussions. They ask me a lot of different questions about, hey, I'm thinking about this. What do you think? What does the guidance say? We pull up a lot of FAQs and guidance along the way to help guide along that process. I provide a lot of different tools and resources. And so that's something that really helps my clients as they're moving along. Just anything you can do to make the process easier is really helpful. And for some, I help them write it. For some of the questions, I say, let me take the first draft of this. I want to get the outline put together for you, and then we can fill in. But there's so many nuances to the application that it's really important to understand it both at a granular level, but also at a very high level. And those strategy discussions are very important to really ensuring a successful application. And then I think another thing is come to the webinar next week where we talk all about the application and ways that you can really strengthen your application, things to think about as you're working on that application.
And I would say also with the webinar that even if you're really experienced in pneumatic applications, there's still tidbits that you can take away from the webinar. And I'd also encourage you to have others on the team, others that will be involved in the application process. Because as you pointed out, Rebecca, the more informed, the better informed the readers of your application are, the more likely they'll have real relevant comments to make the application stronger. And
Absolutely.
I yet to see an application that had too many reviewers. It's always beneficial to have lots of reviews. And I will say, which I think you'll agree, we do need to have someone who's the quote owner of the application to ensure that it doesn't read as if 20 different people wrote it.
Yes.
Reads as
Yes.
if you've created an application that appeals to 20 different people.
Yes, that's exactly right. You don't know who is reading your application, especially for those independent reviewers. They come from all different
Yes.
backgrounds. And so you got to be thinking about that as you're working on your application.
So I do want to talk about what businesses who are interested in receiving subsidized new market hash rate financing should be doing now. But before I do, I did want to dig a little bit deeper in a couple of areas and get your strategic advice. The one of the areas is, of course, community outcomes. Community outcomes is one of the most important sections that you mentioned earlier. So if you could share some tips and try to keep it as brief as you can, because there's a lot to say about
Yeah.
for community outcomes, and there'll be more in the webinar. But if you could share some tips on how to make that part of your application as strong as possible.
Yeah. No, when I have looked at applications and debriefing letters, almost in every case, that community outcomes section is where the applicants are struggling. A couple things to think about. Make sure you're being very detailed in your outcomes. The CDFI fund really wants you to quantify your projected outcomes as well as what your track record outcomes are. And oftentimes, I find applicants may not be consistent with their numbers throughout the application. Or they may not be compelling. And at that point, I think that's really where I can come in and share okay, only serving 20% of low income persons or residents of a low income community is not what the CDFI fund is perhaps looking for. They're looking for benefits that are clearly helping low income communities, residents of low income communities, and low income persons. And so there's no magic number, but I think, Mike, as you say, in many cases, more is more. So if you have a lot of jobs, you want those jobs to be
Yes.
quality jobs and
Yes.
accessible jobs. So you need to be very defined. One recommendation that I make to every client is reviewers are seeing a lot of applications. We want to make it as easy as possible for them to read and move along, say, yep, that exactly makes sense. You answered the question, everything's fine. If they're pausing and trying to follow your math, trying to do the math themselves because it's not laid out for them, that's just stressing me out that you're reducing points the longer they're thinking about that. And I would say the other thing that I see that applicants really struggle with is just simply answering the questions, making sure you're looking at all the guidance and at the question and actually answering everything that they're asking for. Because in the community outcomes section, there's questions about community engagement. And oftentimes you give examples, but they're not actually about community engagement. You want to share this great example, but it maybe isn't the right place to talk about it. And so I think that's really what's the most important. Make sure you're really familiar with the guidance, what the question's asking for, start there and build out.
There are good points about building out, identifying the core that you want to address, building out, and then putting the discussion in the right places in the application. And that as each time you read the application over again, you can make it a little bit better, a little bit finer. But I did want to also talk about the CD's business strategy. And as part of that, a CDE has to report on their track record. Now, for many CDEs, that's fairly straightforward. They just report on how they've used prior round new market test allocation awards. However, for many CDEs, it's not that simple. Obviously, if you're a CDE that hasn't received an allocation ever, you're not going to be reporting prior awards. And if you haven't received an allocation authority in a long time, this could be a more challenging part of the application. Please share your thoughts on completing the track record as part of the business strategy section.
Sure. So I think what CDs need to think about if they haven't received an award ever, they're a first time applicant or haven't been successful, is you list a parent company, a controlling entity when you are becoming a CDE. That parent company is the track record that you can talk about and highlight as showing that you know what you're doing. You can do this with new markets. That's what the CDFI fund wants to see. And so you can rely on that controlling entity's track record. You can also do that if maybe you haven't been successful in each of the rounds that you've applied, and perhaps your track record of just sole new markets activity is inconsistent year to year. The other thing to look at is Exhibit B is where you highlight your track record. And many people just look at Table B1 and talk about similar new market type activity. But you need to look at the whole exhibit because oftentimes B4 is another area. And so I think sometimes applicants think, well, my Table B1 isn't strong enough. But the CDFI fund is looking at that entire exhibit and that's a great way to show how experienced you are. And you're going to be able to take all that experience and take it a step further by utilizing new market tax credits.
Let's turn now to what businesses that are seeking subsidized new market test financing, what they should be doing now. So if you could share for those businesses, you might be thinking, well, these applications are getting prepared. I need to wait till they get an award. But you and I know that's not the fact. You should not wait till they get an award. So please.
Sure. Well, first, I will say it is never a bad time to connect with CDEs. Okay. You need to make as many friends as possible. And I'll talk about that. So, the first thing that I would recommend for any business that's looking at new markets financing as a resource for them is you need to create kind of a brag sheet about yourself. And that's something that we help a lot of clients with. It's just 1 or 2 pages and it's going to hit all the high levels that a CDE is going to ask you about. So, your homework right now is I want you to look at the community outcomes section of the application because we just spent all this time on why it's important for CDEs. Well, it's important for you as businesses. You're the one that's providing a lot of key information. So, I want you to map your project. Is it in a low income community? Are you in an area of severe distress? What community outcomes are you going to be creating? How many jobs? You need to be able to quantify it. If you're providing goods and services, how many students are you serving? How many patients are you serving? How many are going to be low income persons or residents in the low income community? These are key pieces of information. And so if you are familiar with what the CDEs are asking for, then you're cutting that first 5, 10 minutes out of that conversation with the CDE. And now they can really get into the details of your business and how you can work together. So, how do you find these CDEs that we speak of? Well, a lot of people come to our conferences and everybody meets up at the conference and chats. But a couple other things that I talk to businesses about, first steps is go on the CDFI Fund's website and just do the award search. See who's received awards in your state to start from. You can build from there. I think the other thing that I think is very helpful is if you go on our website, just type in QEI issuance, and you'll see we have a cumulative QEI, which is the Qualified Equity Investment Reports that the fund publishes. And that's really helpful because it lists all the available authority, but probably a lot of that authority is penciled down for projects. But you can understand who CDEs are that are serving your area. And it's really helpful in getting familiar with who you should be reaching out to. But really, what I would say is connect with CDEs. Let them know about your business and what you want to do. Because, yes, you want to get included in someone's application if at all possible. That's fantastic. But maintaining those relationships is really key. You don't know which CDEs are going to receive allocation and which ones aren't. You don't know when a CDE is working on a transaction that doesn't move forward and now they're looking for another opportunity. And so CDEs keep a very large pipeline of opportunities. So include yourself in that pipeline, become educated and informed about new markets, and that will really help you find allocation and hopefully be successful with that.
Thank you for that. And I can't emphasize enough for those businesses out there to create this brag sheet. It's almost like creating a puzzle piece that will fit perfectly into a CDE's upcoming application,
Yes.
something that geographically is serving sort of distressed persons and communities, as well as having lots of positive outcomes. And when you do all that work in advance, plug and play, it makes it really easy for a community development entity to include your potential business in their pipeline for first of their application. And then obviously builds a relationship with that CDE should they be successful with an award, but also it makes it a potential business that you can then be sharing with, as you were pointing out, other CDEs who will win, and you get all that going. And it's also something you want to be doing well in advance when you need the financing. Because one thing we haven't really talked about is that the CDs themselves, once they get an award, will want to be getting those dollars out serving the community. So you want to be getting in now, knowing that the awards will be months in the making.
That's right. That's right.
Um, so with that, we've talked a lot about CDs in general. We're going to be applying. We've talked about businesses that are seeking new market tax credits, subsidized financing. We also talked about the upcoming webinar next week. Is there anything else that you think listeners should know before we bring this to a close?
I would just say, don't be scared to call me and ask me some questions. I really do love working on applications. I have worked on them for a very long time, so I am intimately aware of every change that they make every year. But there's nothing better than when the awards come out and I see a client that we've worked hard with on their application and they're on that award list. So I absolutely love it. I will be in San Diego in January. So many of us will celebrate being done with applications. So come see us there and join the webinar next week.
So thank you for that. And to all the listeners, remember all the key deadlines. The
Yes.
one of
Yeah.
them tomorrow, Wednesday,
Don't mess up
right?
tomorrow.
And
Yes.
then please do, I'd like to encourage listeners to reach out to Novogradac as well. We'd love to help. We can provide CD introductions with lots of ways in which we can be of value. And I will provide Rebecca's email address in today's show notes, so you can reach out to her with specific questions. And I encourage you to do so as well. And I also, once again, encourage you to register for the webinar next week, as well as have others on your team register for the webinar. Then Rebecca, please stick around. I'm going to move to our off mic section really quickly. But before we do that, to our listeners, I do encourage you to tune in again next week and all future episodes of Tax Credit Tuesday. I do expect next week, if all goes according to plan, we'll be discussing the Community Reinvestment Act with Novogradac's Head of Government Relations, Peter Lawrence. The Community Reinvestment Act, the final regulations came out recently, and we're going to share some initial thoughts as to how it could be affecting banks' desire to make equity investments in local tax credits, new market tax credits, in other tax credit. Also, I encourage you to subscribe to us for the podcast in whatever approach you use to get your podcast every week. That way you'll make sure you don't miss an episode. And as I say every week, we don't get enough ideas or suggestions as much as I encourage it every week. If you have thoughts for future episodes, please email us at cpas@novoco.com. Okay, Rebecca, now let's move to our off mic section. So you've done well in your career at Novogradac. And as you mentioned, you're approaching 20 years, which is about the full time that the new market tax credit's actually been around, 23 years. But it's getting more general, moving away from new market tax credits. What advice would you give to someone looking to advance their career, whether they're here at Novogradac or somewhere else?
Well, I think the first thing that I would say is take advantage of the opportunities in front of you. Something that we say every time there's tax reform or a new piece of guidance. We're all reading it for the first time. You have a great opportunity to become an expert on it. And that's something that I think people can get really scared to learn something new. Learn, ask questions, work on something new, take advantage of those opportunities. And I think the other thing that I would recommend to everyone is under promise and over deliver. Expect things will get delayed. Your keyboard stops working. You have an unexpected issue that you need to deal with. When I'm working on applications, it's important that I'm timely. And so if I say, okay, I'm going to read it and I'll get some comments to you by the end of the week, my clients know that's going to happen. I've built in some buffer just in case there's some shenanigans along the way.
So thank you for that, Rebecca. And I do resemble one of those comments.
Yes,
Background for
that's exactly
our
right.
listeners. My keyboard wasn't working for a few moments when we were starting to record the podcast. So I'm glad we set aside enough time to deal with the unexpected. So thanks for sharing that with the audience, Rebecca.
Yep. You never know when that keyboard's not
You
going to
never
work or
know.
something's going to happen.
So the other question I wanted to ask you about, it's a popular question for me to ask guests. During COVID, I got back to reading more, and now I strive to read or listen to 100 books a year. So I'm always in search of a book recommendation. So what book recommendation might you have for me and our listeners?
All right, let's see if you read it before. All right, so mine is The 5 Languages of Appreciation in the Workplace. So if you're familiar with the 5 love languages, I read the 5 love languages for children a few years ago because I have 3 boys. And then, of course, you start down a path, and I came across this one. And so essentially, there are 5 languages that speak to individuals. So those are words of affirmation, quality time, acts of service, tangible gifts, and physical touch. So clearly at work, that's a high five, that's a fist bump, that's a pretty short section. But I think it's so helpful because whether you are working with peers or you're a supervisor, it's very helpful to understand how your colleagues are thinking, what's meaningful to them. For many of us, we reach a deadline, we finish something, we send an email of thanks for all your hard work to our teammates, or we're seeing them in the office. Thank you so much for working on this. And it's not that those words aren't meaningful, but sometimes that's not what speaks to them as much as let's go out to lunch and celebrate. They want that quality time. And so for me, I'm acts of service. So when someone I'm working with does something that really helps me or jumps in to tackle something with me, that's what's especially meaningful to me. So I don't know if you know your primary language, Mike, of what means the most to you. So something
That's a
If you need words of affirmation, I'm going to have to send you more emails.
yeah, it's not the words of affirmation, but I do appreciate you sharing that. I have not read it, so I will go through and read it, and then I'll have to report back at some future podcast what my percentages were in the 5 categories.
I like it. I like it. You'll rank them for me.
There you go. So thank you very much, Rebecca. And to our listeners, I'm Mike Novogradac. Thanks for listening.
This weekly podcast has been brought to you by Novogradac and Company, LLP. Archived podcasts are available online at www.novoco.com/podcast or by subscribing to the Tax Credit Tuesday podcast in iTunes, Spotify, YouTube, Google Podcasts, Stitcher, and Radio Public. You can find related links referenced in this podcast on our website at www.novoco.com/podcast. Novogradac and Company, LLP is a national certified public accounting and consulting firm with offices nationwide. Learn more about our professional services at www.novoco.com.